Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst at Alpari Research and Analysis, and this is daily analytical report. Let's start with the calendar. Yesterday we had a day off for American and English traders, investors. So this caused a drop in liquidity and volatility. So basically, Monday was a trading day without a history. We start this week, actually today, with Tuesday trading. On Tuesday, the calendar is not very busy. As you can see, no major Tier 1 data. Fireworks start on Wednesday. We have speech from two major figures from Bank of Japan and from Reserve Bank of New Zealand, and also statement and interest rate decision from Bank of Canada, but as you can see, no major change is expected. With that being said, I think we can move to the charts, although as I said, no major signals, unfortunately. I have three instruments already waiting for you. The rest of them we'll analyze real time, as we often do at the very beginning of the week. So gold found a crucial support. This support is located here, $1,270 per ounce. As long as we stay above the support, the sentiment is definitely positive and the price should continue to go up, because that's what the main trend is. This can be treated as a correction, especially after this defense of this horizontal support and the long-term uptrend line. So currently the most current scenario, the most probable, is the wedge pattern. Wedge is a trend continuation pattern, so wedge should result with a buy signal. But the buy signal on gold will be triggered only when the price will break those two black lines, two dynamic resistances. So price closing today above the black lines will be a strong buy signal. Crude is also a very popular commodity among the forex traders, available on almost every forex platform, and situation here is pretty similar. We have an upswing and a wedge, which should result with a further rise. But the problem is that look at the trading last week. That's a huge bearish momentum. That week was terrible for the buyers, for the price of oil. So this, like on gold, this may be the start of a new upswing, but this on crude looks just like a correction as for now. So it looks like a dead cat bounce, and in my opinion, this momentum was so big and this reversal is so small that most probably we will test this support again. Most probably the price will test this support again. So my outlook on oil in the short term and the midterm is negative. Now New Zealand dollar to Canadian dollar, a bit exotic instrument, but this instrument is with us for a long time. Why? Because in March we spotted this bearish engulfing pattern on a weekly chart. It was a false breakout above this downtrend line. So a false breakout together with bearish engulfing gave us a significant sell signal, and look at this, the price behaved like price action was expecting. What is more, apart from the false breakout and bearish engulfing, what we got here is a double top formation. First top, second top. The price broke the horizontal support here and went significantly lower. Last week ended with a hammer candlestick. Hammer is usually associated with an upswing. And in this case, hammer initiated the bullish correction. So we had a drop, and here we are having a correction. The correction already broke the downtrend line, and naturally the correction is aiming for this neckline of the double top formation. At the same time, this neckline is 38.2 Fibonacci level, so we cannot make this up. This is possibly a very, very good selling opportunity. This is possibly a very good trading occasion. Obviously, if the price will get there and will create a bearish pattern. So only the fact that the price will get there will not mean anything. What we need to get here is a price respecting this line, price bouncing from this resistance. Because price staying just touching this level will not mean anything. For the proper signal, we need to see the price bouncing from this resistance. So with that being said, I think we can analyze new instruments. You need to do hide all, show all, and now you have new instruments. We start with Bitcoin because Bitcoin made new highs. Fortunately, as you can see, we don't have a trading here from the weekend, but you can see that over the weekend the price went significantly higher again. In the short term, that created a situation where we had this ascending triangle pattern. The price broke the horizontal resistance, is now aiming higher. That's a pennant formation for the last 2 days, which is promoting a further rise. So a very positive situation for Bitcoin. We're almost 100% higher from $5,000 to $10,000 or even more. As you can see here, rise is spectacular, and most probably people will be talking about Bitcoin again soon. Again, we'll have another, I don't want to say bubble, but let's say Bitcoin fever. So on Bitcoin, everything looks good. Everything looks ready for a further upswing. Here is the dollar index. Let me show you the dollar index, not this template. I'm sorry, I'm not using any indicators. They are not necessary for trading. They are not necessary to make money. What we have here is horizontal resistance, and the price created an ascending triangle pattern, right? So this is an ascending triangle. Actually, you can do it like this. It doesn't really matter because the price is attacking the upper line of this ascending triangle pattern. What sellers can hope for is sellers can hope for the price to break this black line, because this black line will be either a double neckline of the double top formation or of a head and shoulder formation. Price breaking the black line will mean a failure to break this horizontal resistance and would be able to bring us a sell signal based on this head and shoulder pattern, double top pattern, and false breakout above the horizontal resistance. So sellers can think about selling dollar after the breakout of the black line. Buyers can still think about buying because the sentiment on dollar is still positive. Next instrument, Australian dollar to Canadian dollar. We'll go through major instruments. That's how I approach trading. So at the very beginning of the week, I remove old charts and I try to look for new setups using fresh outlook, fresh view. Australian dollar to Canadian dollar, nothing interesting here. Check Australian dollar to Swiss franc. Nothing interesting here. Australian dollar to Japanese yen. Okay, what is good here is that the price is in a deep downtrend. And most recently, the price created a pennant. Pennant is a trend continuation pattern. Pennant should result with the breakout of its lower line. My problem with this formation is that we are already very low, and going even lower will require more energy. So in this case, the price can go up, but obviously this is not a horoscope. We are not trying to make some artificial assumptions. Okay, trading is not about assuming something. Trading is about making money. And how you make money in this case, what the principles of the technical analysis are telling us is that the breakout of its upper line will give us a buy signal, breakout of its lower line will give us a sell signal. I'm gonna keep this chart open because this may be interesting for the future. Next one, Australian dollar to New Zealand dollar. On daily, you see, I don't like this kind of trading, so long heads, long tails. Obviously long heads, long tails are awesome in terms of the hammers and shooting stars, but these are not hammers and shooting stars, unfortunately. What I wanted to show you here, it's an old thing, but I wanted to show you that the technical analysis not always work. So there was this beautiful symmetric triangle pattern. The price went lower after the downtrend, and it was expected that the price should continue to go down, but as you can see, we have a reversal right now. So the price is not following this. Maybe similar setup here, downswing, triangle. Here is more of a pennant. Here was more of a triangle long term, but the principle is the same. Drop, triangle, drop, drop, triangle should result with a drop. But Australian dollar to New Zealand dollar, nothing interesting. Let's check Australian dollar to New Zealand dollar. I'm just gonna remove those two lines. What we are having here is a beautiful descending triangle pattern, so horizontal support, down trend line, breakout, maybe a correction, but it's not a strong setup, unfortunately. Here also failed breakout from the triangle, so we had a really proper triangle here, upswing, upper line of this pattern, lower line, and here that was a false breakout. False breakout actually should result with a movement in the opposite direction, and at some point it did. Well, we're talking about the long-term chart here, so you can see that after this false breakout with 1, 2, 3, 4, 5, 6, 7 weeks of an upswing, which may be a good result for a false breakout pattern, but I would love to see further rise here. But currently the price is defending the lower line of this pattern. We will see what will happen. Canadian dollar, Japanese yen, nothing interesting. That's a head and shoulder formation. That's a neckline. Okay, neckline is under the pressure right now. Breakout of this support normally should trigger as a strong sell signal, only not if this breakout. And this breakout, yes, I know that was at the very beginning of the year. It was kind of a flash crash on yen, but still disturbs my understand of the technical movements, right? I trade only when I'm 100% sure of the movement, which you never can be sure, but what I meant is that the situation is 100% in line with your trading strategy. Then you have higher chances of a success. If the situation is not in line with your strategy, you just don't trade it. Simple as this. So trading is more about avoiding trading than trading, really. Euro to Canadian dollar, here we had a nice breakout of the lower line of the symmetric triangle pattern. Nice breakout, I mean for the buyers, because that was a false breakout. As you can see, you can treat it as a false breakout or a bounce from the lower line. It doesn't matter because both result with an upswing. Being inside of this triangle is the worst place to trade. You don't trade when you're inside of the triangle, you just wait for the breakout. Anyway, next instrument, Euro to Swiss franc. Nothing interesting. As you can see, since August 2018, the price is in a sideways trend. Boring. Euro to British pound. Today, today we are going higher, but we are going higher throughout the whole May. What does it change anything? Well, yes, we do have a long-term buy signal on Euro to British pound. Here is the horizontal support. Here is the resistance. The price created double bottom formation and is aiming higher, but it's too late to enter now. I mean, the price can continue to go up, no problem, but I'm telling you it's late in terms of the risk to reward ratio. Euro to Japanese yen, nothing interesting. Euro to New Zealand dollar, nothing interesting either. I totally don't like recent price movements on the market. Euro to ruble, here is this head and shoulder formation. We are suffering after this head and shoulder formation. Well, euro buyers in this case are suffering. Ruble is stronger thanks to this head and shoulder formation, which was created in 2018 and actually finished here at the beginning of 2019. The story is that we do have a negative situation. We bounced nicely from this horizontal resistance. We are approaching horizontal support. Breakout of the lower yellow line will bring us a sell signal. And now the most important pair with euro, which is euro dollar. We are trying to go a bit higher, driven by this double bottom formation. This double bottom formation should bring us a buy signal, but the thing is that the buy signal from double bottom formations comes from the breakout of the neckline, and the neckline is marked here with a yellow color. Here we do have a nice combination of this horizontal and dynamic resistance, so we can think about buying euro only after the price will break the horizontal resistance and a dynamic resistance. As long as we stay below, there is no proper buy signal. There is a good setup for the future, but as for now we don't have a trading signal yet. So as you can see, I don't like those setups, and those setups are okay, which I left here, but I don't like the overall situation on the market. That's a problem because I analyze in the long term, and if I don't see a good potential setup today, they will not come tomorrow or day after tomorrow. We will have to wait a little bit. So next few days can be not very interesting in terms of setups, at least from my side, from the price action point of view. So guys, thanks very much for attending the daily analytical report. Rest of the instruments we will analyze tomorrow and on Thursday. Thank you for attending this seminar, this webinar. All the best and good luck in trading.